Welcome to Matters Financial and Geopolitical from the Frontier. I hope you had a good week. We've certainly had quite a busy one here in Nairobi last few days. Let me start with an interview I did yesterday with Citizen TV's Wahiga Mwara about Theresa May's visit to Nairobi, about why the West seemed to be interested again in Africa. Merkel is, of course, in West Africa right now. We had Uhuru with Trump. We had Theresa May visiting. Quite a wide-ranging discussion around those points. Macro thoughts. Argentina has regained the top position for world's worst currency in 2018. After the recent plunge, peso down almost 50% year to date, while the Turkish lira is down only 41.5% since January. That was Holger. And to give you a flavor of how far these currencies have fallen, Indonesia's currency weakened to levels last seen during the Asian financial crisis. Have a look at this chart from David Inglis. And then I'll take you back to an article I wrote about Indonesia. I used to do business there when I worked at the Japanese Sumitomo Bank. Sumitomo Bank had a 50% shareholding in a local Indonesian bank. We had customers like the Bakri brothers, who were quite a colourful pair and deserving of a story all of their own. In that period, 1997 to 1998, and the rupiah is back at levels seen at that time, East Asia was gripped by a financial crisis which started with the collapse of the Thai baht, and the Indonesian rupiah followed. One morning, my chairman, Konishi-san, called me into his office. The government of Indonesia was requesting a $500 million facility. Can we do it, he asked, and that they were requesting we visit Jakarta immediately. The next day, we were in Jakarta, and in the evening we're in State House with President Suharto, his Minister of Finance and the Governor of the Central Bank. Konishi-san and myself engaged with the governor. We established we could cobble together enough collateral, and I turned to Konishi-san and said, yes, we can. We were, of course, going to be rewarded very handsomely. And I had persuaded Konishi-san that not only would we make a lot of money, but they would never forget that we had pulled through when everyone was hitting the eject button. Konishi-san sat on the board of the bank in Tokyo and started to call other board members to get their agreement. We were front-running a request to the IMF by the government. And at that moment, the phone rang, and the minister picks it up, turns to his president, announces we have got the IMF package, but one of the conditions is we remove all the food subsidies. The president turned to all of us and said, well, that means I will be gone in a week. And he was. Suharto, or Muhammad Suharto, was the second president of Indonesia, holding the office for 31 years, from the ousting of Sukarno in 1967 until his resignation in 1998. Took me back to Hotel California. Last thing I remember, I was running for the door. I had to find the passage back to the place I was before. The Indian currency is set for its biggest monthly drop in 3 years. It's last trading just around the 71 level. I read a really interesting report by Citibank about the blockchain and cryptocurrency, and I put some of my thoughts onto a short video, but the link for the main report is there. If you get a chance, do take a look. Bitcoin itself is just below 7,000. This is a chart from Peter Brett. Hope, thoughts, memory and dream are intermixed in this mad universe, Jack Kerouac. Only the magic and the dream are true. All the rest's a lie. Jean Rhys White, Sargasso Sea. This is a young male lion at Topi Plains in the Mara. A planet without the rasping sound at midnight of a leopard call in the forest, or the cough of a male lion's first syllable in a roar at dawn. will be an incredibly lonely one. A world where the wild has been tamed out would be meaningless to many of us. This is of a lioness relentlessly charging, running, splashing through huge lechwe herds all morning. That's from Derek and Beverly Joubert. Finally, after 3 hours of wet hunting, she brings down a youngster in the water. Success for her, but not much for us. She was far away. Strong wind fights along Lens tomorrow. This is a photograph of East Africa's night sky taken in the Serengeti. I went back to Leonardo da Vinci's Salvatore Mundi, Saviour of the World, which currently sits in the Abu Dhabi Museum, I believe. I must remember about chandeliers and dancing, about swans and roses and snow. Jean Rhys again. Our garden was large and beautiful as that garden in the Bible. The tree of life grew there, but it had gone wild. The paths were overgrown and a smell of dead flowers mixed with the fresh living smell. Underneath the tree ferns, tall as forest tree ferns, the light was green. Orchids flourished out of reach or for some reason not to be touched. One was snaky looking, another like an octopus with long, thin, brown tentacles bare of leaves hanging from a twisted root. Twice a year the octopus orchid flowered. Then not an inch of tentacle showed. It was a bell-shaped mass of white, mauve, deep purples, wonderful to see. The scent was very sweet and strong. I never went near it. Political reflections, this is from David Inglis. Let's get ready to rumble. And this goes back to the 9th of July, tariff wars, who blinks first. Trump is now said to back $200 billion China tariffs earliest next week. And this is another point I was making about the strongman conundrum. The fact that if you're the strong man, you place yourself on a pedestal, like Xi Jinping did when he said he was president for life, then you own the problem. Further to let's ready to rumble, President Trump seems to be relishing his financial warfare strategies. He has Khamenei on the run, and in the arms of Erdogan, he has Maduro in Venezuela being attacked by remote-controlled drone, and he has Xi looking ever so fragile. Leading Saudi scholar Dr. Madawi Al-Rasheed calls for the overthrow of the Saudi regime. Says MBS has reached the threshold of terrorizing Saudis, destroying other Arab countries, blackmailing the West. It is time to get rid of him. In November last year, I wrote about the then 30-year-old Crown Prince of Saudi Arabia, Mohammed bin Salman. He arrived on the scene when he was 30 and immediately launched an unwinnable war in the Yemen. I said the existential paranoia in his head is evidenced by the comment he made about Iran when he said, how can I communicate with them while they prepare for the arrival of Al-Mahdi al-Muntazar? And actually, before he launched his Night of the Long Knives in the week of November 2017, I said he had been coached into the early hours by Ivanka Trump's husband, Jared Kushner, before he launched his Night of the Long Knives. Fisk said, put bluntly, he's clawing down all his rivals. And I concluded by saying this is an unprecedented moment in the history of the kingdom and the most perilous moment for the House of Saud that I can recall. Awesome to see Theresa May wearing Nigerian designer Emmy Casbett custom jacket from the menswear brand. Rather good, I thought. Gender difference alert. No way I'd have noticed this clever soft politics from the UK Prime Minister, says Charles Robson. A wave of African nations are looking to restructure debt with China on the eve of a major Beijing summit. FOCAC provides a reality check for the continent. This is Reuters. Ethiopia and Zambia, heavy borrowers from China, have expressed desire to restructure that debt, while bankers believe Angola and Congo Republic have already done so, though details of such deals are sparse. The IMF says Cameroon, Ghana and others face a high risk of debt distress, as does Djibouti, whose main source of foreign loans is China, the fund says, and which holds the majority of external debt. In another article I said how this plays out is now the key to Sino-African relations going forward. A Hambantota scenario would be problematic. I said China had a singular and positive influence on Africa, rebalanced the demand side for Africa's commodities and also bought those commodities on a long-term basis. It was this which triggered the African recovery some 2 decades ago. However, since then, a freewheeling China Inc. has favorited elites, has facilitated large-scale looting via inflated infrastructure, some of which were white elephants on the day they were built. And I'm saying they've lumped the African citizen with the tab. How this plays out, I said, is now the key to Sino-African relations going forward. That a Hambantota scenario would be problematic, referring to the Sri Lankan port, which has been leased to China for 99 years because the government in Colombo was unable to pay for it. The African states have this naivete at times that is somehow free money, as Mr. Davies. From 2006 to 2016, China loaned around $125 billion to the continent. Most significant contributor to high debt risks in 3 countries, Congo Republic, Djibouti and Zambia. Go back to something I wrote in June. The first overarching point is that creditors are not Santa Claus. I was referring to China, and miscues will exact a very heavy price. Countries will be Hambantota. Pepe Escobar takes a different tack in a very interesting piece in the news. Silk roads are just pieces in a giant puzzle, he says. He says the Belt and Road is additionally dismissed as just a scheme to bypass the Strait of Malacca, through which transit 75% of Chinese exports and 80% of energy imports. He says, let's contrast BRI bashing with 3 different dossiers: Malaysia, Sri Lanka and Pakistan. The move by Malaysian Prime Minister Mahathir Mohamad to suspend BRI-related projects, $20 billion, does not mean they are cancelled. This is an economic recalculation, he says. Malaysia may be virtually bankrupt because of the Najib kleptocracy, but that has nothing to do with BRI. He says same applies to China-Pakistan economic corridor. Imran Khan is bent on renegotiating some of its terms. Once again, this relates to bad management by the previous Sharif administration and the notorious corruption of the tax-evading Pakistani elite. And then he says Sri Lanka. And he says this has nothing to do with a Chinese takeover or some mischievous variant of gunboat diplomacy. It is mostly about corruption and the management inside Sri Lanka's previous government. So that's the other approach. Let's move on to the currency markets. Euro, dollar, 116.80. Dollar index 94.67. 94 is the key area. I'm looking to buy it closer to 94. Yen has strengthened. 110.73. Swissy 0.9678. The pound holding above 130. 130.15. The Australian dollar 0.7250. India rupee at a fresh all-time low 71 area. South Korean won 11.1347, Brazilian real 4.1499, Egyptian pound, which is very counterintuitive, but has been one of the most stable currencies around, is at 17.8275, and the South African rand is at 14.7376. Dollar index, this is a 3-month chart, we're at 94.67, my target is 100, I'm looking to buy it near 94. Euro dollar 116.80, feels as if it wants to turn lower again. Amazon in one chart, $2,000. JS Blockland, 10 cent keeps dropping, leaving investors to question when buying the debt will start paying off. 10 cent, of course, is very correlated to NASPA's and then correlated to the South African All-Share Index. Gold, 1207.25. Let's keep an eye on it. What is very strong is crude oil, which has come back to $70. This is a chart from Chi Girl, and it does look frisky. EMFX down. This is a chart to give you a flavor of how far EMFX has fallen. This is from Sun Chartist. August this year, I was writing about currency puzzles and the weaponized US dollar. Look at this from Bloomberg, emerging market turmoil, price of Argentina 100-year bond plunged to 71 cents on the dollar. When it was issued, people couldn't get enough of it. If you like the 100-year Argentine bonds at 7%, you'll love them at 10%, Tracy Alloway. Argentina Central Bank raised its benchmark interest rate to 60% from 45% on Thursday after the peso plummeted to a record low. You remember my piece earlier this month, Cold Turkey. I was talking about Turkey and Erdogan. And look at this, Turkey's economic recovery lies in return to democracy, rockstar economist Daron Acemoglu says. This chart, these two charts give you an example of what I'm talking about. President Trump has apparently embraced a strong dollar and, of course, coercive financial warfare, and tweeted this about Turkey. Tweeted this about the dollar. Our economy is doing better than ever. Money is pouring to our cherished dollar like rarely before. Turkey insists its economy is strong despite the lira plunge. The finance minister is also the son-in-law, insisted that the country's economy did not face significant risks. Well, that's something. And then this is fabulous. Reuters go around Venezuela looking for the petro. Somebody says there's no sign of that petro here. It turns out that Venezuela's petro is hard to spot almost anywhere. The hunt turned up little evidence of a thriving petro trade. The coin is not sold on any major cryptocurrency exchange. No shops are known to accept it. There you go. The Superintendents of Crypto Assets, the government agency that oversees the petro, is a mystery. Reuters recently visited the finance ministry where the superintendents is supposed to be housed, but was informed by receptionists that it does not yet have a physical presence here. May 2017, I wrote that Maduro's Venezuela is a breaking point and you're watching it unfold. And Apurva, I saw a tweet from him saying, many ask me about the link between boring macroeconomics, debt, deficits, interest rates, inflation, exchange rates, etc. and refugees. So here's Exhibit A, says Venezuela, where abysmal macroinflation, 1,000,000% this year, has led to the exodus of 2 million Venezuelans to neighboring countries. Trump, as I said, seems to be relishing his financial warfare strategies. Maduro in Venezuela has been attacked by a remote-controlled drone. Emerging currency index hit a fresh low against the dollar. This chart is from J.S. Blockland. Let's move on to Africa. The police have violently abducted Bobby Wine from the airport, forced him into a police ambulance, and is being driven to an unknown destination. Essentially, Bobby Wine is already more popular than the president. That's the problem. Can Theresa May build a new partnership with Africa post-Brexit? This is David Pilling in the Financial Times. Theresa May's three-nation tour of Africa, first visit by a UK Prime Minister to the continent in 5 years, began in Cape Town on Tuesday, when Harold Macmillan gave his famous Winds of Change speech in 1960. Just as when the then British leader acknowledged the need to recalibrate a relationship with countries demanding independence, so Mrs. May spoke of a fundamental shift and a new partnership. As if to underline what analysts say is a new urgency to engage with Africa, Mrs. May's trip to South Africa, Nigeria and Kenya, where she is the first British Prime Minister to visit in 30 years, came as Angela Merkel set off on her own African tour. As well as sketching out commercial opportunities in a continent whose output, Mrs. May said, could double by 2030, and where 1 in 4 people, a quarter of the world's consumers, as she put it, would be living by 2050, she has also defended the role of aid. However, 50 countries in sub-Saharan Africa have a combined output of $1.4 trillion, less than half the size of France's economy. This is a fact. However, I do think it's a positive sign. I wrote a piece about the pivot towards the Commonwealth earlier this year. Have a read of that. I like this photograph of Harold Macmillan during his trip to South Africa in 1960. The wind of change is blowing through this continent, whether we like it or not. This growth of national consciousness is a political fact. Museveni is finding out about that right now. I said Africa is not a country, it's a ubiquitous theme, meme, but at its core is an absolute truth. The continent is non-linear. Kinshasa is not Addis Ababa, it's not Lagos, it's not Pretoria, but a wind of change is blowing through the continent. Merkel has arrived on the continent in Senegal. This flurry of high-level diplo visits has led Kenyan TV morning shows to chat about a new scramble for Africa, which was what I was chatting about on Citizen. China is loaning billions of dollars to African countries. Here's why the US should be worried. Indeed, article in Time. I was interviewed in an article in Sputnik, and where I was constructive about the UK re-engagement with Africa. I was saying because of its history, it has a lot of leverage and a deep ground level knowledge of the continent. And then I was saying I liked her tone about talking about human capital, newborn free generation. That's the way to shake off, the whole colonial thing which keeps popping up. Britain, I said, preceded China in the US and is seeking to play to that advantage. This is largely a born-free generation. And the UK is wise to play to that theme for multiple and overlapping reasons. On the second day of UK Africa 10 Downing Street visit in Nigeria, the stories of youth, opportunity and shared interest. That was Christian Turner. That was the point I was making. Now about this Chinese restructuring, I said how this plays out is now the key to Sino-African relations going forward. In a Hanban-Tota scenario would be very problematic. Zimbabwe, the court may have confirmed him in office, but Mnangagwa emerges from the controversial election a weakened president. Africa Confidential indeed. And then very interesting conclusion. The rigging and intimidation around the election and the crackdown that followed it mean that neither the European Union or the United States will back a resumption of international support for Zimbabwe. That's not good. The IMF and other institutions, that freezes the country's situation unless Mnangagwa can secure a massive bridging finance from China, perhaps premised on a barter deal for the country's platinum reserves. Mnangagwa's diplomatic efforts at the focus on China-Africa cooperation in Beijing on the 3rd to 4th September could prove critical indeed. Sudan's Al-Rasheed has met Machar and asked Machar to sign this peace deal. My piece over the weekend was about how the Rand had been caught in the crossfire and that Trump, the linguistic and financial warfare specialist, is the machine gun, and the Rand is in the line of fire. And we now know the Rand is behaving more erratically this month than it did during the height of the power struggle between Jacob Zuma and Cyril Ramaphosa. That's just incredible. The Rand will remain vulnerable to both fragile local and global sentiment. The currency slumped as much as 2% on Thursday, but it slumped even more. Then have a listen to this little video that John Githonga posted of President Cyril Ramaphosa responding to Trump. And I said to myself, tweets are missiles, let's see what Trump's got to tell Ramaphosa. South African all shares down 1.18% year to date. MTN shares plunged, wiping almost $3 billion off the company's value after Nigeria's central bank ordered it to transfer $8 billion back to the country. Yields soared to record highs. Oh, that's on the Eurobond, that's from Paul Wallace. Dollar Rand, I still think the dollar's going higher and that the Rand looks seriously ropey, or was it pony? Egyptian pound, 17.8275. The Egyptian pound, extraordinarily, has turned out to be a safe haven. Nigerian all share down 8.25% this year. Ghana Stock Exchange is, I haven't got those numbers, but it's up about 10%. Stanchart CEO Bill Winters wants to take a look at Ethiopia's banking market. Here, the Prime Minister was formally received by Uhuru Kenyatta for a banquet at State House, which was hosted in her honor. She says she's committed to free trade with Kenya after Brexit. Total trade with Nigeria, South Africa and Kenya, the three nations on a tour, amounted to just over £13 billion in 2016, compared to $554 billion of trade with the EU. Then there's been a huge debate about her dancing um, uh, uh, in South Africa, and now she was dancing at the UNEP office. Take a look at that link that Alex J.F. Morales published. Kenya's parliament approved retaining the interest rate cap against IMF wishes in response to email questions. Jan Mikkelsen, the IMF's representative to Kenya, said they were aware of the passing of the finance bill and were currently assessing the implications for the IMF-supported program. Kenyan lawmakers voted to delay a proposed 16% tax on petroleum products for 2 more years, citing the high cost of living, a move that will be a blow to government efforts to raise revenues through higher taxes. Lending to the private sector has collapsed from 9.3% in 2016 to 2.4% last year. And I was saying the following: I think the president will have to crack the whip, and hard, because notwithstanding some bravado chatter, it would not make sense to lose the support of the IMF at a time when the markets are so skittish and our debt to GDP ratio is nudging 60%. Lawmakers have continued to insist that they are ready to remove the upper limit of commercial lending rates at 4 percentage points above the central bank rate. However, they insist that they are not ready to do that. They did, however, remove the minimum deposit rate of 70% of the central bank rate. Petrol vote, a tax vote, punches a 71 billion shilling hole in the budget. We've had a huge number of results. Let me start off with Jubilee. Jubilee Insurance reported first half earnings per share slipped 1.267%. What struck me was gross earned premium declined 9.035%, and that's the first time I can recall such a decline. Investment income bumped up 26.728%. Profit before tax up 3.4%. EPS down 1.267%. They're holding 54.94 billion shillings worth of government securities. They're paying an interim dividend of 1 shilling a share. It's the minus 9.035% slide in first half gross earned premium. That's caught my attention. And is that a signal around competitive pressures? Well managed business, solidly priced, price earnings ratio of 9. Bamburi Cement reported a 66.515% decline in first half earnings per share. Turnover was down just 0.178%. Operating costs up 9.157%. Profit before tax slumped 72.888%. EPS down 66.515%. They're still paying an interim dividend of a shilling, down 60%. They said the first half of the year was challenging. Market in Kenya continued to contract, closing 8% behind the prior year in a high external cost environment. Uganda was negatively impacted in the first quarter by production challenges and product availability, while the second quarter was negatively impacted by competitive pressures. All major players recorded extra capacity and slowdown in government expenditure. Uganda audit identified a number of balance sheet write-offs amounting to 315 million with no cash impact. Higher power, coal and raw materials costs, as well as the impact on the balance sheet write-offs in Uganda, large unrealized forex losses amounting to 465 million shillings, mainly on a $14 million loan taken in Uganda. From a macro cement consumption perspective, -8 to -10% year on year is not a good, is a very high hurdle to be trying to clock. Sanlam reported first half earnings per share was negative 10 shillings and 5 cents. They impaired financial assets 1.15 billion, and it's just unbelievable. They had bonds, Athi River Mining, Real People, Kalu Works. I mean, there's obviously no credit calculation going on there at all. Housing Finance reported first half earnings slumped 95.604%. Have a look at those earnings. BOC earnings per share was up 33.79%. Those earnings are on rich wrap-ups as well. Deacons reported a loss, first half loss, 2 shillings and 16 cents. They said this: the overall retail trading environment during the period was characterized by extraordinary and exceptional events that adversely affected the business.